So I think this is obviously a work in process, and I'll share with you kind of the mindset of where I'm coming from, but I'll touch on the highlights because it's not really, I don't want to belabor the detail that we have to go through. So I'm going to share my screen here. And the first place I started is, after all of these conversations and after all of the talking about the network of the networks, what are you investing in? What are you actually investing in, right? As an investor, here it is. You're investing in a technology-enabled private equity 2.0. What you're investing in is a software that enables commerce across all industries, all verticals. If someone has the mind or the capacity to place this technology in use in a vertical, they can make a success out of it. Why? Because it does something that's never been done before across the internet, and that is break down all of the verticals and allow someone to move forward and understanding the flow from commerce and beyond. So I just leave it simple. So you're investing in a technology in a private equity company. Move my screen down here. The private equity and VC industries need to move up the value addition scale. Awake is a Berkshire Hathaway 2.0 model, holding company that invests in high growth, cash flow businesses in traditional industries that can be digitally transformed. So I won't read every slide, but as we go through here, what are we looking at? We're looking at enabling a modern consumption economy, co-creation of interconnected technology platforms, enabling communities of individuals and markets for value-added goods and services, creating millions of entrepreneurs and aggregating high growth cash flows. So think for a moment about Slack, right? Many of you probably familiar with the $27 billion acquisition of Microsoft by Slack in this past week. It was announced. Slack is simply a network of networks. It's communications, right? What they do is they enable any individual across the platform to sign up, and they allow them to make a network, right? Like an Awake X network or an Awake VC network or any other network that's put onto Slack. They enable communication. Slack's not even profitable yet, and they're selling for $27 billion. So in essence, what we're doing is we're enabling a network of networks of actual revenue producing businesses. So imagine if everybody that had a Slack channel today was actually in the business of pushing revenue through that channel, not just pushing personal communication. That in essence is a picture of what we're doing. So the power of that is ad infinitum. So I would say Awake, the operating system that you're invested in, is a seamlessly connected marketplace and supply chain. It's got a common cloud infrastructure, common fintech infrastructure, common data analytics and AI infrastructure, a common blockchain infrastructure. It is a network of digital media and audience engineering infrastructure. OpenTangle, the network of networks, the line of sight is a billion shoppers by 2022, estimated via partnerships and various others. And this key then falls on two sides: commerce facilitation and capital facilitation. So I'm going to speed up here a little bit. If you look at the left side of this chart here, we have Awake COMFAC data. And on this side, we have Awake CAPFAC data, right? So this is commerce facilitation across the network. We see transactions. And again, I'm coming at this from the point of view, Mr. So-and-so, what you're investing in is a software that tracks commerce data across the internet, right? It empowers networks, and it provides, on the other side, liquidity as a service. So the first question is, what am I investing in? You're investing in this modern cloud operating system. You're investing in corporate strategy as a service where anybody can launch a network. You're investing in business operations as a service, and on this story goes. So how is this structured? This is structured simply here that people who are already shopping on the internet, and if you can't see my cursor, I'm on the bottom right in the blue. People that are already shopping on the internet, they're the shoppers, right? They already use media and customer reviews and various other things to put their trust in to purchase, right? When we buy something from Amazon.com, we always look at user reviews. We're looking at media that's been printed on the internet. So we take that network of individuals and we make them co-sellers. We offer co-selling capability. And the co-sellers ride on the sellers of the marketplace, the brands and the manufacturers, this vendor supply chain, right? So that's how this network just each one relies on the next step. It's already in existence today. We're adding this co-seller network layer. And then we have transactions across the market. The Awake Money handles these transactions. Awake Cash drives these transactions through a software that allows us to identify the most valuable of these companies, the most valuable of these transactions. We'll be able to see things like who has the greatest revenues, whose products are selling, what are the trends in product sales before they're even mainstream, right? That intellectual property, that data has tremendous value globally. And then that rides on this exchange facilitation, or the Awake X layer, which is joined by all of these co-VC companies. So again, I won't spend a tremendous amount of time. I'm going to skip down a couple of slides. So we aggregate cash flows by industry verticals. And again, Mr. So-and-so, this is what you're investing in. You're investing in the operating system that resets the internet. You're investing in aggregating cash flows, aggregating audiences and shoppers, aggregating suppliers and vendors, and aggregating tech, APIs, and talent, right? So this is an aggregation or a roll-up strategy, right? Roll-up strategies have been known successful strategies for many, many years. But in each industry vertical, the problem with a roll-up strategy is that it takes a relationship in that industry with numerous other relationships trying to get them all on the same page. What we do is we identify, without necessarily any knowledge of the individual business, who's the best candidate for a roll-up strategy. We can see that from the beginning. So now I'm going to switch, and I'm going to go back to some of the documentation here. What are you investing in? You're investing in Awake VC. Awake VC and all the other vertical markets that it's going to empower in the future, right? Awake X, Spiritful, Awake Realty, Awake Market, and on and on and on and on the list goes. So what does that look like if you invest in these? Well, if Mr. So-and-so, you bring us $5 million, Awake Market, we believe has a value that we could place a minimum value on that in relation to this investor's position of 1.1 million. Now we're making up a number here. What's the purpose? We've answered the question, what is he investing in? Now we're answering, where is the investment going? If I invest in this network operating software and it's in the form of Awake VC, what does it look like? What is the security of my assets? So the security is in these other companies. It's in ShopType, right? Awake Market. It's in Awake X, this capital facilitation, which I'm going to go to in a moment. It's in Spiritful. It's in Veed. It's in the success of every single one of these companies. And actually, all of these companies are formed today. They're existing. So what does that look like on the balance sheet? Even if we assign a minimal amount of holding to those companies, your $5 million investment is securitized by what we estimate to be about 20 million of assets. Okay, this is the line of thinking that I'm going through with this investor, right? So we put that. Now, what does that look like if we move forward a year or two, right? What if what if next week or next year, we start new verticals, right? We start some of these other things. We start Corner Network and Indiful and Awake Biz and Awake Auto, and we assign any nominal value there. What is that company worth with its management team, with its license that's been granted for its use in our network, and with its claim as the storefront, like Ancor was just talking about, like with they own the store, they own the vertical, right? What is that worth?
Just to clarify, Awake VC is targeting a percentage of any company that we work with, right? So it starts out with minimum 10%. That's our goal. And I think I've articulated that in other places. We are shooting for internally, anything that we internally incubate, 11%, just nominally, more than 10. So that's why you'll see this 11% number used for modeling purposes. And that's what this whole 11% everywhere is. It's 11% off a estimated value, which we're, assigning based on our existing operations and whatever we're doing with.
Minimum off, right? A minimum off.
That's right. Yeah.
A minimum
I
off
think
as in the starting point. So in other words, Awake VC will not get involved with anybody unless we have a minimum of 10%. And of course, it's a joint venture world. So it could be majority or whatever, but it's a new co that gets created each time when we get involved with somebody, right? So it's always that value co-creation, allowing us to begin life in that venture with a minimum of 10%, and then also allowing us to buy more as the venture is financed.
Right. Right. And so our thought process is, in any one of these companies or any one of these verticals that's formed, there actually has to be an entity formed. That entity has to have a management team. It has to have a vision of where it's going to take it. And it has to be granted its license to be a part of our network, if you will. It has to have the intellectual property that will help to drive that vertical. So at that point, take Veed, for example. Veed is, say, pre-revenue, but it's not that it has no value. We could say Veed has a $10 million valuation. Why? Because it has a technology, it has a vertical, it has brands, it has a management team, it has all of these things. All we're doing is duplicating that model down. Spiritful very soon will have $10+ million valuation. Why? Because it'll be an organized, well-led private entity with a mission in the marketplace to drive hundreds of millions of dollars worth of revenue across its platform. So that trickles down. And as you can see, you can just keep going and going and going and going and going with all of these underlying assets. So for an investor that would consider investing today in Awake VC, he is securitized by a fractional piece of ownership in every single vertical across the nation. Here we've identified 50 verticals, and there's probably another 50 or another 100 we could add to that. So that reduces the risk from the investor's time. So we answered, the first question was, what are you investing in? It's an operating system that resets the internet. It's tech-enabled commerce facilitation, right? Where are you invested? You're invested in Awake VC, which holds a piece of every one of these underlying companies. Now, when do you get your money back? What's the exit? How do you take this massive aggregation of all these 50 different companies and what do you do with it, right? How do you do that? And that leads us to Awake X, which is the capital facilitation side, right? And this side can run on the same technology, the same view, the same data inputs that every other business runs on. And it feeds into, call this the Wall Street component of what we're doing, right? So let's use Veed as an example, okay? I'm gonna go ahead and I'm gonna take a look at these two middle paragraphs. Awake X platform is analogous to a Bloomberg 2.0. It's a real-time derivatives engine that taps live into proprietary commerce facilitation, okay? What does that mean in the case of Veed? In the case of Veed, that means we see every transaction across the network. We see which products sell the best. We see which products have the best margins. We see which products have user subscriptions that seem to sell more and more and more, right? Every little bit of data that you could think of coming across our network for a variety of hundreds of thousands, tens of thousands of SKUs, we get data information on that. And when do we get it? We get it live when the transactions happen, right? So obviously this is not 100% unique in the marketplace. It's called live analytics. It's what we're doing. We're grabbing that data, but we get it before a private company never shares that information with the public. And a public company only shares that information in their 8Ks or their 10Ks, maybe months after those sales have happened. Well, we're getting this information, even the trends in purchasing, ahead of time. So this COMFAC, I'm back on the second red paragraph, powers the digital market networks across Main Street, allowing Awake X to apply AI to incredibly rich first-party marketing engagement and sales transaction feeds to find and package investment opportunities for the clients. So what does this boil down to? What is he investing in? It's this market network. It's this operating system software. Where is his money held? It's held in Awake VC, and it's securitized by hundreds of people, literally at this point, working to make sure that each of those individual entities is a success. And now, when does he get his money back? Let's go back to Veed for an example. I'm going to go through here. So what are we doing? We're facilitating liquidity in multiple asset classes, giving access to various investment classes, providing an ease of transaction, an easy compliance platform, a global asset marketplace with programmatic financial services APIs. Boil this down, what does it give us? It gives us the data. So use Veed as an example. You've got maybe 30 companies that have 30 licensed brands that are selling product across the internet, okay? We can look at the data and say, which are the best, let's call it 15 of those 30 companies. Which are the best companies? Which are the highest profitability? Which of them are leading in sales? Which of them lead sales first, right? And let's say that, like usual, right, your top 20% are your highest performers. Let's say $300 million of revenue is moving across that system. Probably the top 10 or 15 companies are driving the vast majority of that revenue. Let's choose and utilize that data, that information, and that revenue to then do what Amit has termed as go to the unspac. And this is where that roll-up strategy that's been so successful in the past, that always adds enterprise value to any business, right? And I'm simply, and I know you guys are super sharp guys, but right, if you own one hotel, it has value, but if you own 100 hotels, it's the value of those hotels plus a premium, because it's all been organized. And that's in essence what we're doing. So we don't have to go out and seek each individual Veed company like so many others are doing, trying to do roll-ups in the cannabis industry. They're going out trying to talk to every company, trying to keep track of the revenue, trying to keep track of what comes through those balance sheets, trying to sort the information and make sure the picture of that company that's being presented is actually what's there. What we're doing is we're monitoring the transactions. We see the revenue from the beginning. We identify from our data what makes them attractive, and we go to the specific companies that will drive the vast majority of revenue, that have the highest profitabilities. And what do we do there? We take that to the SPACs. The average SPAC has raised over $900 million. They're on a ticking clock. A special purpose acquisition corporation usually has 2 years to spend the money that's been raised on acquiring companies, right? And it's a very difficult job to aggregate and take all those companies and put them together. So what we do is we go and we say, we've identified $200 million worth of revenue that we think is on a growth trajectory of X, that in 2 to 3 years will be 600 million of revenue or 900 million of revenue. What is that worth in the marketplace? That is how these investors get their money back. We will take these companies and provide a liquidity event based on the data that we have, going to the markets with a strategy that's basically only been empowered by the software that we have. So how does this look? I'm going to share 2 slides and then I'm done. Typically, this is the way things work. You get your sales data in from Stripe, PayPal, Visa, places like that, right? And then it actually skips right over here, and those companies take sales data, right, real transaction data, and it's broken through a traditional financial statement, and they put their analysts on it, and they put their private equity funds on it, and they look at, doing an acquisition, doing an IPO, doing a secondary, whatever, right? What we're doing is we're inserting in here these 2 layers. We take the sales data, we take that and apply that into insights based on our commerce facilitation, looking at things like cash flows, inventory, supply chain, social trends, buying media. And then we roll those companies into our capital facilitation engine, right? Looking at debt, equity, trade finance, factoring, derivatives, whatever the best exit strategy or whatever the capability is in the marketplace. And we then end up at Wall Street, but with a much better offering. So here's the way our network stacks up. It kind of inverts things, and it says we have a network of vendors and wholesalers, market suppliers. We have real estate companies, real estate income companies. We have retailers. We have e-commerce platforms. We have technology startups. We have direct-to-consumer, private label brands and manufacturers. All of those entities feed into our commerce facilitation layer. And all of the transactions that happen across our payment facilitation layer, right? The data comes across our payment facilitation layer. We then take that financial data and apply it to our capital facilitation. And then we go out there and we show, here's our deal flow, here's our deal flow, here's our syndications, here's our workflow for getting involved in obtaining access to these companies who we're independently, we have a part of our network we are tracking. And we look at the investment banking world and the wealth management world and the funds management world and things of that sort. So I give a little timeline of the fund partnerships. We give a little bio. We give a little bit of information about Awake X and its projections. And how does Awake make money? We take a position. We have a 3 to 10% equity in each company. We have cash flow from the fees, from ShopType, from the Awake network. We have a licensing value, and we basically go out and apply that just across the platform. So here's the thing. This is a grandiose vision, but what does it really boil down to, right? What are you investing in? It's an operating system. It's a software that gives us, data and analytics in these verticals. Where are you investing it? You're investing it across, you're investing in Awake VC, who is a master licensee, if you will, and enables all of these other verticals. And then when do you get your money back? You have an exit strategy point for one investment based in hundreds of verticals, right? So this is an investment that pays an ongoing dividend to these investors. This investor could likely get all his money back in the first single roll-up transaction. But that interest remains through 10 transactions, 20 transactions, 30 transactions, right? We only have to prove that one is viable, and VEED is very well on its way to doing that. So, what are we doing? Sources and uses of capital, comparables in the marketplace, blah, 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 blah. So with that, I'd go back to this portfolio of companies. When you look at these valuations, when you look at, each and every company and its vertical and its respective balance sheet as it begins to launch across the globe, right? The investor has to make the determination. Do I trust this investment? Is like a Slack, right? Look at this team of people across the world, right? Many of your names are on it, and all the individuals working in tandem to make this successful, right? Mr. Investor, these people would not be a part of this network. This many individuals, bright, opportunistic, entrepreneurial, successful individuals would not be involved in this particular capital raise if there wasn't something to this technology. So what we're asking in essence is trust. There's a recent example, for example, in the Slack acquisition, that a network that empowers networks can be highly valuable, right? We're asking that you put a little bit of faith in the fact that our network, which will empower commerce facilitation networks, commerce transactions, all revenue driving entities, will have some degree of success in the future. And with these live examples and all of this, what we have going on in Poland, what we have going on in the US, what we have going on in India, what we have going on in the UK, right? There'll be successes through this. Some will be more successful endeavors than others, but again, if VEED simply gets rolled up and sold, this investor can make his money back. So that's a bit of a choppy presentation. We're working with the materials and the things that we have that we have on hand to work with today. But I think I just basically tried to answer the questions: what are you investing in, and ultimately, where is it? Where is my money being held? It's in these entities, right? It's a VC model. And how do I get my money back? What's my exit? And if you answer those things and have even the smallest degree of confidence that these networks that we're powering will be successful, then it's kind of silly to think that an investor would not get excited about the opportunity. Now, there's lots of risk and those types of things, but I think we've addressed that to some degree. So anyway, that was it in a nutshell.
Thank you, Troy. I know people may have to leave, so feel free to do so, but otherwise questions we can take for just a few minutes. One quick comment, yesterday or day before, whenever it was, Jeff was conveying he had to leave, but he was talking to a hedge fund guy who's been a hedge fund guy all his life. And, he basically talking to him and said that, we're likely to raise in the next, 3 years, over $1 billion. That's what he said to him. He said, and you should help raise the money. That was his point. to that guy. And of course, come in on some of this and so on. But yeah, I mean, that's the magnitude of the opportunity, and frankly, I think that we need about $10 billion over the next 3-4 years. And that's really all we need, because the Vision Fund tried to do what they did with $210 billion, 200 billion extra. We don't need that. We can do everything with probably just $1 billion, but I think we'll raise over probably in the range of 10 billion in the next few years. So questions on the model, guys? This is just an engineering, thing. We were talking yesterday. You want to design a bridge, or you want to design a tunnel from, New York to London. You can. You just have to do it one step at a time.
Absolutely right. One step at a time.
With clarity, right? Where you're going, one step at a time. If you know what the blueprint is, right? So Elon Musk is not some mad scientist. He's simply an engineer. So an engineer's job is to engineer complex systems with, complexity management abstractions. That's what engineering is. So we've created abstract concepts that are now putting things together. That's what abstraction is.
Just this presentation part, if you could clip out of this recording and send it to everyone. Maybe in the next meeting we have, we could people could come back with questions or feedback, because it will take a little while with Troy's explanation, only that part.
Yeah.
So they could even show it to people in case there are some in close investors who's known to you well. You want to share something, this small little presentation goes, because I think he's really clarified the whole thing.
Yeah.
The clarity is there. Very good.
That's
clarity.
not a problem.
Yeah, it just needs to be made prettier. If I pitched me, like Albert's a professional venture capitalist, he probably thinks that's one of the worst presentations he's seen. But the reality is, it's hard to grab an enormous global concept that's not really happened before and drive it into a pinpoint entity for one guy to have the security that it's going to work. So and I know this because the first 10 conversations I had with Amit, I was totally confused. I had no idea what the network of networks was, and but it was like studying blockchain, right? It took a long time, and finally I'm like, I get it. Like, now I get it. So I think if I just take that presentation and I put it on the same, I put it all in one set of flowchart, right? One slide deck with a common theme or something like that I can kind of use that base presentation to get down, and maybe then it's distributable, right, across the network. We really need one common. So I'm not switching, obviously, from screen to screen. The other thing I didn't touch on was the convertible note. So I don't want to take any more time, but it's a simple convertible note that allows him to invest and then converts upon another funding round. So.
Very good.
Yeah. And the other thing you guys should keep in mind is we're also designing the debt financing piece, which means that, the idea of offering any investor a 10% coupon rate, based on our flow of cash flow, and not being dilutive on the equity at all. Simply offering a 10% return. That's it. Just offer it on the digital ledger. I mean, people will take that all day long.
Mm-hmm.
It's backed by the revenue, right? It's backed by the transactions. So it's like literally like factoring, basically. So you can tap a 10% feed out of this. We split it at the, at the node level, at the transaction level. So the 10% comes out of the commissions, basically, right? Ideally, if that's possible, or at least half of it comes out of there. So we reserve 5% for the investor, and the remaining 5 comes out from the backside, in every real transaction. So you can return 10% all day long.
There might be worth sharing about Himpaco and that Real Stuff network real quick. Do you mind if I give that?
Yeah.
So I just want to tell you guys. So I had a gentleman that I've been associated with in business for a number of years, and he called me up. It's been a while since we talked, and he said, "Hey, I want you to look at what I'm doing." He sent me his deck and information, and if you want to look it up, it's Real Stuff what was the website? Real Stuff. The Real
It's
Stuff.
Basically hemp cigarettes.
It's hemp cigarettes. It's called the Real Stuff. Real Stuff Smokables. RealStuffSmokables.com. But he has a packaging facility, and in 2 locations, they can do 3 million packs of cigarettes a month. And they're doing a CBD infused hemp cigarette. And I explained to him very briefly that he's trying to get brokers on board to do 2 things: help sell his product, and and he gives them an affiliate fee. I said, we have this set up for you, right? We have a software that does this for you. So instead of an accounting nightmare where you have to figure out which brokers are getting paid and what they're getting paid for, just put everybody in the attribution layer and distribute the funds immediately as they settle. It flipped his lid. So he said, you could do this for my brand. And they also white label brands. But an hour after I talked to him, he sent me an email with 15 hemp companies that he said all should join the network, right? 1 hour, and he's a busy guy. So it just shows that when it clicks with somebody, so he can use it because of his brand, he can use it because of the white label brands they provide for, and he sent me 15 of their suppliers and partners that he thinks should be on that network. And why? Because there's an attribution layer in there for each one. So, and I need to get on that and hand it back over to Barry and those guys, because it's amazing.
Cool, thanks. That was it. I think, guys, we'll definitely share this. Any comments, guys? Kevin, any comments from you on what you heard? Since you're the closest based in North America.
No, I'm sorry. I had you. I'm sorry. I had my mic muted there. No, it's very exciting. I mean, every time it's like another little piece kind of falls into place. So it's very powerful, I think.
Cool. Thank you. Next time, Naveen, we should walk through fractal commerce so people get what's going on retail 2.0.
Yeah.
So people can really begin to sign up offline retail.
Experiential offline retail.